Um, and man, we are continuing with our series, uh, 2025 Summer Boot Camp. All right. Today's lesson is Board of Directors. Board of Directors. This series helps the students understand the core principles of the ORS system. This is the perfect series for someone that is a beginning student, right? If you have been trying to, uh, learn this thing and you've been watching me trade live, you're like, man, I kind of see it, but I kind of don't, right? I kind of think I know what I'm doing, but I kind of don't, right? That's this series, right? This is a series to get you straight, get you caught up. And so I'm excited. We haven't done a series in a while, honestly. It's tough to do series, like, especially when I've already done series prior, right? Like, so for me, it's like, man, go watch the archive, right? Let's just get to business. But there's always a different version of me that you guys get in a new series. And that growth, that growth should also be included in the new series. ORS has essentially evolved, right? You hear people even talk about like they trade old ORS. It's evolved into to where it is right now. Now, the funny part is old ORS, all they're really saying is there were some very basic approaches that we focused in on, and we still do, but I think it gets lost in the sauce sometimes of all the other things that we're talking about. And so my goal is to continue to while leveraging how we have evolved, right? The beauty of how the system has grown and evolved, leveraging that, but also not forgetting that at the end of the day, we got to keep it simple. Okay, we got to keep it simple. And so this is my hope in these updated series to kind of merge it all together, right? To merge it all together. And that's what I'm really hoping for, and getting into that. So I'm gonna jump in here. Let me greet you guys. So wherever you are at, from the East Coast to the West Coast, right? You guys, some of you guys are other countries. Welcome to you too. I actually decided, right? Because many of you guys know I'm headed to Miami right now. Plane leaves in a couple hours, and I was like, you know what? Let me just record this and then go to bed, right? Because I was gonna get up early and record. I looked at the driving schedule, like I could still teach live, but then I was like, I won't be at the airport as early as I would like. But like, let me just get out the way, right? So I'm recording this right before bedtime. Hopefully I don't sound like it. Doing my best to give you guys the same energy I give you. Actually, I got probably more energy right now than I would in the morning, because in the morning I still be giving y'all the Barry White voice, right? So hopefully I sound a little bit more awake. We'll see what happens. But basically we're gonna get into this, and so still stay engaged in the chat, right? If you have any questions, put them in the chat. I'll definitely check it out. But this has been pre-recorded a few hours earlier, and we'll go from there. All right. So today's lesson is called Board of Directors. Okay. The Board of Directors. And so if you've taken the prerequisite, then right? You know that essentially what happens is there are three things that we call our three pillars. Okay. Three pillars. Now, let me share my screen. The other day I wasn't sharing, and you guys had to chase me down and get me to share your screen, Chuck. Share your screen. It's like, oh, my bad, y'all. Sorry. Sorry about that. Sorry about that. Apologies. But there are essentially, we talked about this. One of the reasons why you can trust that you're not wasting your time, right? Is because of the principle. Sorry, I'm trying to get the screen to you guys. Boom. All right. Because of the everlasting principles, okay, of how the market works. This is not just a random assembly of random confluences. Okay. I can't say they're the strongest confluences to ever exist, but for me, they have been the strongest confluences that I have found. Okay. And I've looked at a lot of things to go hand in hand. Okay. Now remember, it's built on the back of it's built on the back of structure. So it's still, at the end of the day, you got to be able to see what's happening here, so that when we dress it up, right, you don't forget all that, right? You don't let these other things that are potentially here to help, you don't let them harm you. Okay. Now, somebody may ask, well, Chuck, why do you not just look at this? It seems to be enough information. And to be honest, there is. I will say that probably ORS is one of the reasons why, though, I'm so good at market structure now, because I will say that some of the ways that I decided to look at things utilizing my system helped me to perfect the market structure, right? And there's certain elements. So now I can kind of see it. I can see it, like the things are not here, but I know what they look like, right? I know where things are happening and where things are changing. And so either way, right, I still see this even when I don't see it, right? But even when I see this, these indicators, here's what I mean by that. Even when I see this, right, I'm still seeing this. So the key to this is to not dump one for the other, to find value and honor in both. So the answer that I would give to someone when they say, well, Chuck, why do you use indicators? Why? Here's the reason. Because here I am with my opinions, right? My thoughts, my opinions coming out of my head. Okay. Now, here's the thing about me. I have one perspective, right? I have one perspective. Okay. This is bad drawing of me, but this is me, right? I'm supposed to be a nose and there's two eyes. Okay. This is me. I need another ear, huh? But like I said, this angle, you wouldn't be able to see my ear. You guys are sleepy, so I'm gonna be silly right now. Apologies. This is me. And these thoughts in here, they belong to me. And depending upon how I'm feeling, smiling, or a little scared, a little frustrated, a little whatever, these thoughts change. Maybe I am hungry for some pips, right? Maybe I am hungry for some food. Maybe I have a certain bias that I am married to. I'm married to my bias. Maybe, right? Maybe I missed a step and I wasn't paying attention to a level. Maybe all of these different things that can happen. In other words, over here, there's subjectivity that I have. And not just me, but I could bring in Sammy or Johnny or Sally or Rachel or Kevin or Nancy, right? I could bring in someone else and I ask them, hey, what is your opinion? And they say what they say. And now I'm like, well, that doesn't match my opinion. Yeah, but my opinion's right. Oh, your opinion's right. Okay, cool. Bring in someone else. What do you think? Right? And that other person is like, well, I see what you guys are saying, but I actually think it's this. And then they have their own opinions, and then they're not matching. Everybody's looking at the same chart. Everybody's looking at the same candles, same time frames, but walking away with their own individual opinion. Okay? This right here is what I understand. I understand that me and just these candles, there is a subjective nature here that even when I try to be objective, there's still an influence that I can't avoid through other things that are just a part of being human. And so there's a subjective side that just for me is I don't like this, especially if there's something for me that is better. For me, if I could not only have these strong opinions, but to have somebody from the outside that can be objective about it, seconding what I'm saying or vetoing what I'm saying, then for me, this is of benefit. And so this is why I have my board of directors. My board of directors allow me to veto, right, what I want to do, or to second what I want to do by them having a vote or a say. Now, I have 3 board of directors that I have to answer to. And the first board of director that I have to answer to is called Trend Direction. And Trend Direction is basically what we look at, and we talked about it yesterday. It's a technical side of our system, but it has to do with determining what direction we are going in. All right? The trend direction, what direction we're going in. And the way that we make this objective is by using moving averages. And in the system, we have 3. We have a 4 EMA. We have a 20 SMA. We have a 50 SMA. And we have a 200 SMA. Now, the stars of the bunch are definitely the 20 and the 50. But the 4 and the 200 are important as well. Just not talked about as much, but important. And so here, these are moving averages. Now, what is a moving average? Let's talk about this. Well, moving average, it allows us to simplify the price action. Okay? We get to simplify the price action. So someone will be like, it's going up. Someone will say it's going down. The moving averages say, over here. I got the real answer. Why? Because you can't manipulate the data. The data is the data, just the facts, man, right? Just like men lie, women lie, numbers don't lie. So I bring in this objective pattern. And the way moving averages work, right? Let's say you had 3, and you had 7, and you had 4, and you had 2, okay? So what we have is we have 3, 7, 10, 14, 16. We got 16. We divide that by 4, right? And so the answer is 4. So the moving average would say 4. It would take the 4 numbers and it would say, if we're using a 4, and it would say the average of that is 4. But then we go to 6. Okay. Now we have 7 and 4, 11, right? Then we have 11, that's 13. Then we have 19. So now, instead of the actual 4, we do 19 divided by 4, bringing us to the moving average would say 4.75, because it's taking the last 4 numbers. If I just do it one more time, just to make sure you got it, let's say it's 12. So we would take that 4, that 2, okay? That's 6, plus another 6 is 12, plus another 12 is 24. Okay? Divide that by 4, and now our number is 6. So it went from 4 to 4.75 to 6. Now, is it going up? Absolutely. How do we know? Because average price is rising. Okay? This is how moving averages work. Well, what's the difference between the EMA and the SMA? SMA focuses on an equal weight balance between all of the numbers. And EMA places more weight on the most recent numbers. That's it. EMA is an exponential and SMA is a simple moving average. Okay. And so we use these 4. Now, if you don't have these 4, then what you want to do is reach out, right? Reach out to me and ask me, right? There's an indicator called ORS trend direction. And what I've done is I have already put the 4 that we need in here. And it's very simple, right? We can see right here, here's the 4. And it becomes one indicator, right? One indicator. Now, this one is not a part of Price on Premium. It's just free to the ORS community, right? Now, why would I do something like this? Because this is 4 indicators. So if you have like a certain level of account and you wanted to trade with our system, well, you wouldn't have access to 4 indicators, right? So I put it all in one and I already just customize it. So all you got to do, come on in here, you got your 40, 20, 50, 200, and you just change your colors. Okay, adjust it if you like. But there you go. The 4 is white, the 20 is blue, the red is the pink one, or red, or the 50 is the pink or the red one, and the yellow here, the gold or whatever, is the is a 200. Okay, so notice the gold is more utilized for longer term trends. So if you notice, basics of moving averages. When price is below a moving average, when price is closing below moving averages, you have a bearish momentum. When price is closing above moving averages, you have bullish momentum. So when price is above this gold one, we're overall in a larger move. When we were below here, we're overall in a larger move down, right? And so the 200 can be used for the bigger picture, okay? And so that 200 can be pretty powerful even when you're on the opposite side. Now, here's a simple thing, okay? Very simple. 20 above the 50. When the 20 is above the 50, we say that the market is bullish. When the 20 is below the 50, we say that the market is bearish. That's it. So what is happening? Well, 20 below the 50, there's something called a slow and a fast cross of a moving average. And when it's going down, they call that the death cross. The death cross. You rarely hear me say this, but that's just because I'm trying to give you guys the basics, but I rarely say death cross, right? But that's what it's called. When the fast one goes below the slower one. So the 20 is faster and the 50 is slower. They call that the death cross. Okay. The golden cross, like this, is when the fast goes above the slow. This is called the golden cross. Okay. And this is a bullish signal. So in this scenario, I should be looking for buys. In this scenario, I should be looking for sells. Notice how there's no argument. Which direction should I be looking for? Board of directors, you guys should be looking for buys. But I think it's going to go down from here. Okay. If you think it's going to go down from here and we're saying it's going to go up from here, then it looks like you have to sit on the sideline until you agree with us. Oh, really? That's what I got to do? Yep. That's what you got to do. All right. Just got to sit down somewhere. Somebody outside of myself, something outside of myself that is not just subjective. Okay. They're always objective. Okay. Always objective. Now, here's one of the main things. The 4 runs through the price. You can see the 4 runs very closely through price. And so one of the things that you really don't want to do, like you wouldn't want to enter a sell while your 4 is sitting above your 20, because that would be bad. And as you can see, once this went above the 20, it really was bad. You went in the wrong direction for about an hour or so, going in the wrong direction. So that wouldn't have been fun. Okay. But when the 4 is below the 20, that right there typically moves you in the direction of a sell. When that white is below the 20 or the white is above the 20, right, that's changing the direction. So not only do we like to have the 20 above the 50, but we also want to make sure that we are making a decision that agrees also with the 4, right? So if like you're a person that wants to time your entry, then one of the things you want to do is really wait for that 4 to be on your side, right? So you wouldn't want to enter in here. You want to enter right here when the 4 came back, right? So the 4 is pretty cool. We'll talk about entries and stuff more, but this is over. This is my first board of director. The first board of director is called the trend direction. Okay. Trend direction. That is the first board of director. So number 1, trend direction. Okay. Trend direction. Number 2, right? The next board of directors is momentum. Okay. Is momentum. That is the first one. The second one. Okay. Is momentum. So we have trend direction and we have momentum. Trend direction and momentum. Now, momentum okay. In order for us to look at this pillar, so the board of directors and the pillars are the same thing, right? But I'm using this term board of directors so you guys can understand how I consult with these pillars, okay? They are my teammates, okay? They're my teammates. They keep me honest, keep me consistent. Now, momentum. Momentum is actually just us paying attention to volume, okay? But through a momentum-based approach, okay? Now, we use the MACD, stands for moving average, convergence, divergence. But I have upgraded it to what we call ORS momentum. Okay, ORS momentum. So if you don't have this one, please let me know. But this is the next one, ORS momentum. And so also free to the community, it looks like this. My mouse is bugging a little. Free to the community. Okay. And it looks like this. This is momentum. Now, when you first load yours up, it might not look like this, but you can change it, right? You can change it from looking like this, right, to looking like this, or looking like this, right, or looking like pretty much these are the main ones that you'll see. Okay. Now, this is ORS momentum, and the way it works, right, is basically when we are in a place where we pay attention to these three areas. Sorry, I'm trying to put this back. We pay attention to these three areas. Okay. The momentum indicator is made up of a MACD, which is moving averages. I won't go into the big details of it. It's made up of the signal line, and it's made up of the zero line. Okay. Zero line and signal line. Now, the signal line is a moving average. The MACD is moving average formula, combination of two and a formula. Okay. But this MACD is represented by the histogram, or this mountain looking thing. The signal line is this white thing, right? This line. And our zero line is the edge. Now, basically above the signal line, or the zero line, above the zero line equals buy. Below the zero line equals sell. So I'm only going to enter sells when we are in here. I'm only going to enter buys when we are in here. Okay. I'm only going to enter sells when we're in here and buys when we're in there. So what happens with this, is let's say I want to get into a buy, right? I'm like, all right, you guys, I'm about to get into a buy because I see right here, the market has been struggling around this area, and I just got my bullish candle. Oh, this looks nice. About to go. Oh, look, inside bar. We learned about that in class. I'm about to go, right? And I'm just like, yep, I got it. I got what I want to see. Oh, we made a move up. I'm going to take a buy. But when I look here, right, there was no justification for taking the buy based upon here. Okay? Based upon here. I would not take a buy here. Where could I have taken a buy? Over here. But I couldn't have taken a buy in here. Why? Because my board of directors would have said no. Okay? It's that simple. Oh, I want to buy. We're low. Nope, we can't buy. Shut. You can't buy. It's going to go up. Yeah, but not right now. You're not going to buy right now. Hey, when can you buy? Oh, you can start buying now, Chuck. Okay? Now, what does this do? This keeps me from guessing. Where's the bottom? I don't know. Is it now? Nope. Is it now? Nope. Is it now? Nope. Is it now? Yep. And we agree to. Okay? We agreed to. Now, what are the critics going to say? Well, Chuck, your indicators are lagging. And the answer to that is, so what? That is my answer to that. So what? I had a professor in college, and you would say something to him, and you could say whatever you like. You have this beautiful argument in your position. He'd be like, so what? He'd be like, what? He's like, so what? Why does that matter? It just matters. Why? Why does it matter? He would say. Why should I care about what it is that you're saying right now? Right? He was always trying to push us. I had these teachers that were trying to make us grow up, always teaching these lessons. I guess that's what teachers do, right? They teach lessons. But I had teachers that were trying to teach life lessons, and he would always say, so what? Why should I care? Why should I care? And so my answer to it's lagging is, well, so what? Who says I have to be first? Who says I have to get in sooner? Just because there were pips down there, who says I have to get in sooner? My argument would be, well, What about the time you said you were about to buy and you were looking to buy, but all of a sudden the market just kept on going down? What about all the times you were guessing at the structure and you kept getting stopped out because you had your perfect structure that you were looking to get in at, and you just kept getting stopped out because it wasn't ready to go up? So there is a consequence to trying to be first. And for me, I took something that is definitely seen, right? I'm not ignorant of it. It's definitely seen as a handicap, or definitely seen as something that is a it slows you down. For me, I turned that into something that actually was a blessing. Okay? Because what it would do is would keep me from the fake out, or would keep me from being in there too early the majority of the time, right? The majority of the time. And that's all you need. You need something that works, that's an edge overall. And so this allowed me to, while I wasn't catching the bottoms of everything, right? When something really is going to go, I was going to be able to catch it because I would let them go first. And this is what we're going to talk about later. Let them go first. Let them figure out that. Let them go. When they take a break, then we're going to go, right? So I don't care if the average or the moving average hasn't changed or the volume hasn't changed in here. That for me is fine. All I need is for it to change in here so that when it's time to go, I'm going to take this. Okay. So what does that mean? Well, ultimately, ORS is best for trading with continued momentum or continuations, right? That's what we're looking at. We're looking at waiting for the trend to change, not guessing, right? Not predicting. We prepare, we don't predict, right? We patiently wait. And once we see it, then we strike. Okay. So we'll break down this pillar more and some ways to really, really lock in. But ultimately, that's the thing. It's a confirmation for me, right? Very, very basic confirmation that says, if this is an agreement, then it's okay. Now, I will use other things, and you can see these things that say bull and bear. These are divergence filters, right? So it's reading the price action and it's detecting divergence, right? Divergence is where your oscillator, in this case, your MACD, is doing something different than what price is doing. So the value in the oscillator went down while the value or price went up, and this is considered divergence. So they did something different. Okay, they did something different. So this is called divergence, and so it has a divergence filter on a feature on there as well for bullish and bearish divergence. Okay, now again, we'll break this down more as we go into it. Okay, the only other piece I want to give you on this is the signal line relationship to the MACD. So there's 4 states of this MACD. Okay, 4 states of the MACD. There's currently buying. And what I call currently buying is when the MACD is above the signal line. So when this is above the signal line on top of it, that I call currently buying. So all this was currently buying. Currently selling, the S is the other scenario when the MACD is sitting below the signal line. Now, traditionally, people use the MACD as an entry signal. This right here, this whole cross right here ends up being an entry signal. I do like it. Like if you want to be someone that gets in there early, right, then that's a part of your confirmation, right? So I haven't taught on this as much because I don't use it, but I could talk about it. It's not my main approach, but if you have a nice bullish candle and you have currently buying, right, you're probably gonna get a little bit, right? Currently buying can be a great place, or currently selling to get earlier entries if that's your thing. Okay. Now, you now know the two things that this means. So now, why did I say there's 4 stages or 4 phases? Because on one side, we have what it's currently doing, but whether or not the momentum or the momentum is bullish or bearish, right? Starting to get sleepy. The momentum is bullish or bearish, okay? Whether or not that is also the case. So what I do here, I don't think I said that sentence very well. There's 4 phases of the MACD, okay? And basically it is determined by looking at the first thing, is it currently buying or currently selling? And the next thing, is it above the 0 line or below the 0 line? When it is below the 0 line, we call that bearish momentum or selling momentum. And when it is above the 0 line, we call that bullish momentum or buying momentum. Okay. And so this is the scenario here, right? This is the scenario here. So what are our 4 stages? We have currently buying, currently selling. We also have currently buying and currently selling. Okay. Now that's the same thing. Yep. But now we need to bring in momentum. So currently buying with buying momentum, or currently selling with buying momentum, or currently buying with selling momentum, or currently selling with buying momentum. Okay. These are the 4 stages. And I thought I wrote that. There you go. Like, am I I know I'm tired, but I thought all right, there we go. Currently buying with buying momentum. What does that mean? Well, we're above the 0 line and we're currently buying because the MACD is above the signal line. Okay. Currently selling with buying momentum right here. We're below, right, the signal line. We're also above the 0 line. So this is currently buying with, or currently selling with buying momentum. What's currently buying with selling momentum? Currently buying with selling momentum is this, where we cross up right here, but we still have selling momentum. And then finally, currently selling with buying momentum. I did that twice. So this needs to be selling momentum. Whenever people yawn from around you, you'll hear me say, how far apart are they? What that means is when those yawns start getting a little bit closer, right, that they almost there. They about to deliver that sleep, baby. They about to go to bed. The yawns start getting closer. They spaced out. You still got them for a second. The yawns start coming in closer. So you guys heard one right there. I don't know if it came across in the recording, but that was a yawn. We're going to see how far apart are they. All right, here we go. We're almost done. Currently buying momentum. Currently selling, buying momentum. Currently buying, selling momentum, and currently selling momentum. Okay. All right. 4 phases. Go ahead and type that in the chat. I want to see how the classroom participation is. Go ahead and type that in the chat. 4 phases of the MACD. Okay. 4 phases. Now, we're going to talk more about this as we go on, But basically, there's also one more thing that you could type as well. Type the first thing, and then the second thing I want you to type is this principle. First the volume, then the price. Okay. This is a principle that you'll hear me say over and over and over again. One of the reasons why I don't trade with just price action is because I am missing a key component to the story. And the other part of the story is the volume. The volume is the heads up even before the move happens. For instance, this right here is a glorious candle. Okay, this right here is a glorious candle. But I will tell you that it means nothing ultimately when I look at things. Why? Because volume is giving me a heads up. Volume has told me that it was right here that I had the greatest amount of volume and I could expect the market to continue up. But when this happened, this tells me, whoa, nope. I know that candle's big. I know we made a higher high. We closed above. But this right here, we got nothing, ladies and gentlemen. Okay, we got nothing. What do I mean by that? Well, essentially, this volume is telling me ahead of time there's nothing. So look at how little bit of volume comes up there. And so that right there is a strong confirmation. First the volume, now price is confirming as it breaks structure. And we'll dig into this more. But once that happened, we're going to the downside, ladies and gentlemen, right? It's just a matter of time. And even this push up again, same thing. Very low volume. We got nothing, ladies and gentlemen. That right there, very strong move with nothing. Oh, we in there. Okay, we're in there. So we'll talk about that more. But first the volume, then the price. That's the principle. Okay. Now our final board of director possibly may be the star of the show. Okay. The final, I was looking at my notes, sorry. The final star of the show, right, is our third pillar. And our third pillar is currency strength. Okay. Or just strength for short. But currency strength is our third pillar. And essentially, we can start with this because literally it only makes sense. There would be, like, as Forex traders, this is our secret weapon. Okay? This is our secret weapon that we don't go against because it just literally doesn't result in anything long lasting that is good at all. If you want to lose quickly, ignore this principle. Okay. Now we're going to talk more about this, I think, more in this series than we ever have in the past because it is a centerpiece. But ultimately, what is currency strength is us comparing, right, one country and its strength to another currency and its strength, right? And so here's the thing. If NZD is strong, the dollar is weak, then what's going to happen? You need to be buying the New Zealand dollar, selling the US dollar. That's basic. It's so basic, but it's so powerful. So powerful. Let me, as we wrap this up, let's look at this. Okay. Now, let me give you the two versions real quick. So if you don't have this, ORS strength, then let me know. Okay, let me know and I'll get it to you. And then you can add it in. So the 3 free indicators, trend direction, momentum, and strength, our board of directors, come with just being a part of the community. Okay, not a price on premium tool. So if you don't have those, let me know. Right. All right. Now, I use that. What is that? Well, that's a vortex indicator. Now, what is the vortex? Well, the vortex wasn't initially created for currency strength. However, through a lot of testing and trials and stuff, I started to realize actually I could substitute it to help me with understanding strength versus weakness. Okay. Now, I don't have complete values, right? It doesn't work exactly like a strength like a currency strength indicator, but it still accomplishes the goal. And so when you put the OR strength on here, this is what it looks like. Okay. Now, I didn't go into this, but we'll talk about it more. All of these 2 down here, they have the ability to be partnered with another time frame. Okay. Now let's walk through the settings real quick as we finish this up. My blue one represents the base currency. My gray one represents the quote currency. So in this case, the base is New Zealand, the quote is US dollar. Okay. So basically, look in here. While this is bullish, see, this is where they come together. Someone might look at this and say, well, I got my bearish volume, I should look to sell. But when I consult with the other board of director at that point would say, nope, we don't agree on that sell. Sorry. We reject that sell and say, oh, okay, sorry about that. Right? Nope, we don't agree. And here's the thing, we want everybody to agree. Okay. And so basically when the base is above the quote, the base currency is stronger. So what should I be doing? Buying New Zealand dollar, selling the dollar. I should be looking right now. This is telling me look for support levels, right? This is one of the things that we're going to talk about. This is going to be one of the things we're going to deal with this pillar more than we have in any other series. Okay. In any other series. And I'm excited about that. Okay. But these are my board of directors. They keep me objective. They keep me actually in the place where I am. I'm making the decision that I should be making, right? One of the things, you just look at this, right? It went bullish, someone might buy. Nope. Board of director says, nope, right? We're not doing it, right? So you have these moments, right, where your board of directors can veto things for you, okay? Now, next week, we'll get into this. We'll continue with this, right? We got Pip Rally on Saturday. And I'm looking forward to it. Y'all, I had a blessed time with you guys today or tonight. Hope you guys had a blessed time with me this morning. I got to go. I got to run. And I will see you guys next time on my way to Miami with my brothers. I'll see you guys next time. Love you.